Joining me now with more on the markets is Justus Parmar. He's the founder and CEO at Fortuna Investments. Justus, thank you so much for joining us from Miami this morning. And what do you make of this market? We've clawed back a decent amount of those April 2nd induced losses.
Yeah, good morning, Kristen. Great to see you. Thanks for having me. So we've obviously had a pretty chaotic and very hectic month of April, but it's pretty wild to think that we're basically where we started. It was kind of a throwaway or wash of a month. I think net that's very good for investment holders, IRA holders, speculators. I think we're generally in a really good spot. I think it's almost unfathomable to think maybe throughout the down periods that we'd be here where we are. But I think most importantly, we have to figure out where we're going from here. I'm of the opinion, Fortuna Investments is of the opinion that this is one big negotiation. I think China is more reliant on us than people really, truly imagine. We believe that these trade deals will be cut. They may not happen overnight, but the framework of these deals, I think, certainly will be cut. There's over 100 countries currently lobbying the administration and the White House to do these deals. Everybody wants these deals to happen overnight. They're not going to happen overnight, but I think the framework, even the framework of these deals being set, is going to be very good, healthy for the economy, healthy for the market. And I think on the other side of that, I think we're going to start to see some tax cuts. We're going to see no tax on tips, no tax on overtime, all these great stimulating factors. With any luck, I think the interest rates are going down, and there's about $8 trillion worth of investment roaring to come into the country. So I think the setup is fantastic at the current moment.
Justus, let's break that down bit by bit here, starting in fact with the Fed decision, because of course we know we're going to get that later this afternoon at 2 p.m. Eastern, followed by remarks per usual from the Fed chair at 2:30 p.m. Eastern. Look, traders basically certain, based on the markets, that the Fed will keep rates unchanged. But of course, the path forward and what we hear from Powell in the presser will matter. What do you think is the right course here?
I think Powell is going to keep the rates steady. I think he'll cut it twice, maybe 3 times if we're lucky on the back half of the year, which will be very stimulative for interest rates. I can understand why the secretary, the chair of the Fed, Powell, I can understand why he's risk adverse. It makes sense. I think if you look back during COVID and the inflation, he was a little bit too late to act. So I think he doesn't want these tariff issues to really ruin the balance of his term. He only has about a year left in his term. And so I think he's going to keep them flat. If it was up to me, I'm a little bit more risk tolerant. I can see the slowing of the economy a little bit. I'm of the opinion these tariffs are transitory. So I would actually drop it a quarter point, but it's not my decision. It's essentially the secretary's.
And what is that balance here that is playing out for traders in this market? How do our viewers balance the two in terms of what it means for equities? Of course, trade talks underway, but also a Fed that might stay higher for longer.
I would take a long-term position. Us at Fortuna Investments, we're long-term investors. We believe in the resilience of the American economy. When these dips or blips happen, we're buyers of the American economy. We're big buyers of tech. I'm a buyer of the S&P 500. These are great value opportunities. And so, if your perspective is a longer-term perspective, I think the balance of the President Trump's presidency is going to be a very good, very strong one. He's going to start announcing some fantastic deals in terms of trade, in terms of the interest rates. I think they're coming down. I think that stimulus is coming in terms of reducing interest. Tax rates. I think so. There's a lot of goodies for people to look forward to. I don't necessarily think they're all priced in. I can understand why people are reticent and apprehensive, but I think that from the S&P perspective, we're trading at 5,600 or so. I think by the end of the year or into next year, I think we could have a 6 handle on the S&P. So I think there's some really good things to come in the back half of the year.
Interesting. Now, of course, you mentioned the big, beautiful bill, as President Donald Trump has described it. Congress working on it right now as we speak. And in fact, the House Majority Leader Steve Scalise had told me here on the floor of the stock exchange just a few weeks ago that he intends to have that on the president's desk by Memorial Day. How does that loosen things up? Are there sectors that are set to benefit if that does indeed proceed?
Absolutely. I think across the board, because if you look at the essence of the bill and who's being affected, it's basically across the board tax cut. Half of the employers of the country are small businesses. So 50% of all businesses, small businesses. This is going to be great for small businesses. But keep in mind, the American economy is a worker's economy. So this is really going to help each individual taxpayer, tax earner, if they're not paying tax on tips, if they're not paying tax on overtime. There's all sorts of great stimulus for the common man, the common person. And that's who the ultimate consumer of the economy is. So I think kudos to the president. I hope they get this pushed through. I think you're going to see a roar in the economy like you've never seen before.
Is the low behind us?
I called the low a couple of weeks ago on a different program at 4,900. So knock on wood, I do believe so.
Yeah, that's the growing call, of course, that we hear, including on this show. Justus Parmar, he's a founder and CEO of Fortuna Investments, joining us this morning from Miami. Justus, thank you.
Kristen, always a pleasure.